Welcome to Dukascopy TV with me, Alex Izat. Joining me today in the studio is John Sandwick. Welcome, John.
Good morning, Alex.
So let's start by talking about the Islamic bond markets. Are we seeing sukuk becoming a more credible asset class?
Well, I'd like to think that 2014 may be the breakthrough year on a global basis for the sukuk as a financial instrument for both corporate and sovereign borrowers. This year we saw something really amazing. We saw the UK government issue sukuk, about £200 million worth, and we saw the Luxembourg government issue sukuk. I think it was something like 300 or 400 million euros. We also saw at the same time the South African government issued sukuk. And what's, I think, really important about these developments is just think about the UK government sukuk. It was 12 times oversubscribed. I mean, there was 12 times more demand than there was supply. If you go to any other market, in primary market where there's a new issue of stocks or bonds or what have you, oftentimes people struggle to sell what they have. There's just not sufficient demand. But if you can imagine coming to market with a new product and having 12 customers for every single product, you're sitting in what we call the catbird seat. So what we've seen in 2014 is just enormous demand for high quality sukuk. And at the same time, we've seen for the first time Western governments issuing sovereign sukuk, thereby establishing a benchmark. You know, new sukuk issuances in 2012, 2013, and very soon 2014 will each year be over $40 billion. And this year, we're only going to be maybe $1 billion or $2 billion short of having an annual record for new sukuk sales. So as an asset category, it can't be ignored, not by asset managers, not by long-term investors, not by pension funds, not by insurance companies.
How have new tax and information laws in Europe, and especially Switzerland, affected appetite in Saudi Arabia and the Gulf for Swiss private banking?
That's a good question. Switzerland is going through a transition in its banking sector. I came here in 1993, 21 years ago, and I started Swiss private banking. I worked with some of the biggest names in Swiss private banking, Deutsche Bank, Credit Suisse, in partnership with UBS. And I can tell you that the Swiss private banking industry that was established by that time in the 90s was a very, very different industry than what we have today. There is obviously increasing global competitiveness. The Swiss can never forget that jurisdictions like Singapore, London, Dubai would love to take away that business and are ready to take away that business. Something that produces, I think, around 6 or 7% of Swiss national GDP could lose market share in the global asset management environment if these other jurisdictions are as successful in taking market share. The second thing, of course, is, as we all know, the game has changed. There is now information sharing treaties with countries around the world, so people that used to put their money into Switzerland to avoid paying taxes or to have a high degree of secrecy that they formerly had, that's gone, it's finished. In my markets, Saudi Arabia and the Gulf, they never had a tax evasion desire for their foreign money, for the money they put outside. Their money was being put outside for safe haven status, to find a safe home from all the troubles of the Middle East, and also professionalism. They felt if they put their long-term savings into Swiss bank accounts, they would get the cream of the crop, the very best type of asset management. Now, that dynamic has changed. Locally in Saudi Arabia and the Gulf, there's been recently a gigantic boom in real estate, in local share markets. As oil prices lifted and lifted and lifted and stayed high, local asset valuations skyrocketed. It hasn't been the case over the last couple of months. We've seen a dramatic decline in the share markets of Saudi Arabia, Dubai, Abu Dhabi, Kuwait, and in parallel, we're getting anecdotal information that the real estate market is starting to collapse as well. So right now I see in Saudi Arabia and the Gulf, of course, as always, the enormous generation of wealth from oil sales, even at $60 a barrel. And I see also a great potential for the Swiss banking industry to take advantage of the current changes in the market and try to take more market share.
And finally, what about Islamic asset management? What's new in that front?
You know, Alex, I have been working on my doctorate for more than a year. I think I'm going to be the first guy in history to have a doctorate in Islamic asset management. In pursuing a doctorate, one has to read everything there is that's ever been written on a certain subject. In my case, Islamic asset management. And as such, the industry doesn't really exist, although there has been a fairly good body of scholarship, of research, of scientific method in terms of validating and enshrining the validity of Islamic asset management. And recently I was reading an article by some scholars about multi-asset class global portfolio investing. Now, I go back to Swiss private banking. This is the core product of Swiss private banking. Taking the money from a housewife in Jeddah. Let's say she comes to UBS or Credit Suisse or Julius Baer with $5 million of life savings. She gives it to the bank. In every case, the bank will do global multi-asset class investing in a style that reflects her risk and reward profile. Now, as I've been arguing for about 7 or 8 years now, the Islamic asset universe has developed far enough that you can now do multi-asset class investing like we do at UBS, like we do at Deutsche Bank, like we do at JP Morgan, but with 100% Sharia compliance. The article I'm referring to that I was reading the other day, it is an academic study using scientific methodology, all of which can be recreated by anyone, and it fully validates not only the legitimacy of multi-asset class global Islamic investing, it also even points out to the oftentimes superior performance and lower risk. So in short, other people than me are now able to confirm that Sharia compliant asset management in most cases can have more profit with less risk.
That sounds great. Thank you so much for coming in to explain that today. Well, that's all we have time for here. If you want to know more about Islamic asset management, check back in with Dukascopy TV. Goodbye.